Wow, guys, just wow. What a change from a couple short weeks ago. What did we say on Monday about watching for easing on tariff policy because bond yields were continuing to creep up again? Well, we got just that and a few mixed messages along the way. And these mixed messages. Oh yeah, and these ones too. Yeah, and that one. But the market didn't seem to care, and we've entered a bit of a sugar rush. The VIX and the 10-year responded in concert, both dropping every day this week. And the S&P 500 and NASDAQ both closed above their 10-week downtrending resistance, the NASDAQ actually being a little stronger amongst the two, with tech outperforming and breaking that downtrend a day earlier. Both indices pretty much closed into the high of the day on Friday. And on top of all that, we had the Zweig breadth thrust fire yesterday, try saying that 10 times fast, which is a very rare signal that has a near perfect track record of predicting bullish price action ahead. Add to that Bitcoin continues to outperform, now overbalancing in both time and price. It's up 22K from the bottom and on the verge of printing 3 green weeks, which is a very bullish signal. Also, the broader crypto industry saw game theory starting to kick in, with SoftBank and Cantor Equity Partners launching 21 Capital, bringing billions into the space. The US regulators have also eased regulation on banks, opening the way for them to move forward with crypto products. We've got so many tailwinds for this side of the market. So is it time to sell your kids and buy all the disruptive stocks you can? Well, perhaps, but I'd still advise waiting for a pullback and that higher low to set to get in. And don't actually sell your kids. Please don't. Even if we bounce away from here and set new all-time highs, which is feeling quite possible, these kinds of markets can still find more pain and lower lows 3 to 6 months down the line, which is really interesting if you subscribe to the Bitcoin 4-year cycle theory. It continues to be a trader's market, so join me as we recap the week and look at the key charts for swing trading stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a great week. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the content get out there to more people, and you'll be doing your part to keep me from crying myself to sleep at night. Again. Today, I'm going to focus a little less on individual charts because most everything was green this week. We simply need to look at key sector leaders and any charts that are showing a potential breakout or have interesting price targets. Aside from the charts and news, what I'm focusing on at the end of the video today is a bit of TA education, looking at reversal signals and how to spot those. As you've heard me say, the goal of this channel is to help make investing and trading as accessible as possible. And in addition to helping you maximize gains, I want you all to understand how to read charts so you can spot opportunities for yourselves. Sure, the news are important to help us paint a full picture of the backdrop. However, the more time we spend on this kind of training and charting education, the more you'll be empowered to think for yourselves in the markets. I don't want you just relying on dumb YouTube personalities to tell you what or when to buy and sell. Okay, let's start with some of the key headlines for the week. The S&P 500 officially printed its third worst start to the year in all of its history, but that was bolstered and offset by the aforementioned Zweig breadth thrust. Some are actually calling this a super Zweig. This thing really needs to be easier to say because we now saw extremes in both directions, and this rare indicator has traditionally led to 20+% returns in the following year. Not too bad. Add to that some big players are starting to announce plans for onshoring in the US, and others are moving production out of China. Also, EU trade deals seem to be making progress. Remember, this trade war could still re-escalate a la the latter half of 2018, so keep your head out the window and focus on names that are strategically less impacted by tariffs or have diversified away from their production ties to China. We did see terrible numbers from the New York Manufacturing Index on Friday and also saw horrible month-on-month home sales, actually the worst since the GFC. However, the Home Builders ETF is starting to tick up a bit. The underlying economy is unquestionably still weak, but bigger corrections tend to be land-led. And while I think we may have a bigger concern to think about in a year or two, right now I don't think it's the time to panic. That said, I have been talking to friends in the real estate space, and they are starting to see a spike in people refinancing their homes to pay off credit card debt and other debt. Essentially, they're taking on new debt to pay off existing debt. This could be a leading indicator to pay attention to. If the trend persists broadly, the only thing keeping people above water is the value of their homes. And if home values drop, like we're starting to see in formerly hot markets like San Francisco, it's time to watch out. That aside, Tesla, while not showing the most positive sales numbers, had an upbeat earnings call with increasing diversity in revenue streams and a rosy outlook for the year ahead. Sales forecasts are strong, and the launch of Robotaxi and their Optimus bot has markets excited. Remember, the sales slowdown was only because of the global rollover of all production lines for the new Model Y. Now, Google on Thursday outperformed massively in earnings, driven by search and YouTube revenue. Facebook also caught a bid from the news, and the broader market really needed this to help bolster confidence to enter more aggressively back into tech names. Meanwhile, with gold hype at an all-time high, the charts seem to be showing signs of slowing, and if we look back at history, these kinds of extreme readings generally correspond to topping periods. Bitcoin made a new all-time high compared to the Nasdaq this week, and we're looking for flows to continue to come in from both global M2, institutional buying, and a rotation from gold into a faster vehicle that hasn't run as aggressively yet. There's a lot of quiet stacking going on in the background, and OTC desks are running low on supply again. All signs are pointing to a squeeze, and Bitcoin looks poised to be a top performer in the months ahead. So with that overview, let's look at a few key charts. Okay, starting on the S&P 500, and I hope my voice holds out. I've been traveling this week, and I just came off a 2-hour presentation, so I've been doing a lot of talking. The best news here on the S&P 500, looking at this yellow diagonal line, this has been our downtrending resistance that we talked about in the intro for the last 10 weeks, and we just inched our head above it on Thursday and then closed confidently above it today into the high of the day. That's a key sign. The other key sign for us, looking at our range from the all-time high to the low of this correction, we are above that 50% line, so watch this one. We want to ideally move away. Maybe we bounce and retest it. That's always a great sign, and then continue the move from there. Now, normally with the kind of buying we had the latter half of this week, we would have seen more of a short squeeze with price really rocketing upwards. But the reason I think we didn't see that is that so many short positions got absolutely smoked on this massive rebound here when the tariff pause was announced. So I think the broader market and bigger institutions were just scared to short in bigger numbers because of something like this happening again. And wouldn't you know, we saw it today, and there weren't as many shorts in the market to really rocket that price upward. We do still have a gap fill overhead right here at 55.70, so that would be my near-term target for early next week. And I suspect once we get into this trading range right here, that's when we'll face that bit of rejection and potentially come back down to test this for support and keep moving away from there. But keep your eye on this zone, because these kinds of consolidation ranges will provide your first levels of resistance. And we can see that confirmed actually in the volume right here, which is sitting right above this gap fill. So maybe we hit that volume zone, then reject a little bit, and then try again. Okay, moving over quickly to the DXY, the US dollar, you can see we're still struggling with this resistance here. I would have anticipated more strength, especially on the headlines we had this week, for a bounce and a retest maybe of some of these levels before rejecting lower on the macro. Remember, we are anticipating the dollar to continue falling, but this was just about the only thing not rising on positive tariff news. The US dollar has been a key leading indicator for trade war sentiment, and it's almost as if the US dollar is saying that it thinks trade headlines have lost their credibility. Okay, briefly moving over to Bitcoin, and I'm on the weekly time frame here. We're going to cover this much more in the TA section, so I'm not going to spend as much time with it here. But you can see that we have a strong base forming with these 3 green weeks. We need to watch the close on Sunday to make sure this closes green, but it's seeming very likely. We are back in the middle of this former trading range, so we have broken cleanly into that, which is a fantastic sign. Now, this big candle does worry me a little bit, because sometimes when extreme moves come, that can lead to some chop, as we saw here on the downside. So I would anticipate a bit of a pullback before we continue on up. That would also help us to form market structure. If things go up too fast in a straight line, it means they're going to come back down to earth rather quickly. But if we can form a base and bounce away, that gives us more historical volume and trading ranges to build support underneath. There is so much more to say on this chart, but we're going to get into it at the end of the video, so just hold tight. Moving over to Solana on the daily, I will just make this full screen. And here we have our key $150 resistance zone right here. We have gotten on top of that, and right now we are testing that for support. I wouldn't hate it if we broke below this and then retested support before having a genuine breakout to the upside. If you recall from last week, we had this very clean inverse head and shoulders right here, and that has a price target of $180. So we're still targeting that in the near term to the upside. It is notable that today on Friday, Solana was showing relative weakness compared to Bitcoin and the broader market when it had been showing strength all the days prior. So maybe that's just a sign of a bit of exhaustion right now, and we either need to consolidate or we need to have a little pullback before we can attack the upside again. That 180 level is really the next one to watch overhead. So that $180 is really our next major resistance zone overhead, followed by the 195 mark, which is the 50% level from the all-time high to the bottom of this drop. Beyond that, the psychological $200 to $210 range will provide a lot of historical resistance. But once we break above any of that, then I would anticipate a bit smoother sailing to the upside. Moving over to MicroStrategy, also making this full screen, we had that breakout, and from this little inverse head and shoulders, which you can only see on the 4-hour time frame, but the target was right here at the mid 170 range. Let's call it 177. We hit that exactly today before having a bit of a pullback. I'm not saying that's the end of the move, because we all know how when the hype train runs on MicroStrategy, it can go parabolic. But like Bitcoin, I would like to see it form a bit of structure, because these kinds of parabolic vertical moves are not sustainable and will come crashing back down to earth like we said previously. So if Bitcoin has a pullback, this should move in concert. And perhaps we set a support here and keep bouncing up, or perhaps we set a support a little lower down before bouncing up. But anticipate a bit of resistance. If you want to play the swings here, this would be a time to start looking out for overbought conditions and signs of a bit of a reversal. If we're talking about other Bitcoin proxies like miners, just going over briefly to CleanSpark and to Mara here, they both had solid breakaways here. And this does not look like a lot on the charts, but if you measure bottom to top of this move, that's 44% right there. And just in the last couple of days since Wednesday, that is a 24.6, almost 25% move here on CleanSpark. So these things can run fast. They can also correct quickly. If you're interested in getting in, watch that Bitcoin pullback, see where these correct to. You can see I have an alert here at the $8 mark. And that would be a safer point for an entry, so you're not sacrificing all that loss on the downside. Going over to Mara, this also continues its breakout. It's beginning to flash a bit of a sell signal here on the 4-hour. We're not getting that on the daily, but what this is telling me on the 4-hour with these overbought conditions exactly at 2 standard deviations on the IA mean reversion model is that if Bitcoin is going to pull back next week like we're anticipating, this would probably come back to this volume cluster right here would be my first guess before bouncing away if Bitcoin continues its move. So that would be at $12.38. And currently the price closed at $14.25 on Friday. Okay, looking at SMH briefly, the semiconductor ETF, this had a stronger bounce away the last few days than both the broader market and the tech space in general. NVDA and the Taiwan semiconductor charts are also looking strong on this bounce, and I'm looking for a breakaway to tell us that we're not correlated to that Cisco chart from the dot-com bubble. We already talked about Tesla, but I think it's worth looking at the chart briefly. You can see this huge candle we had today to close out the week. We had earnings right here, a bit of a day of indecision on Wednesday. And then with positive tariff news, this moved up with the broader market. We've broken this small downtrending resistance line, but we still have resistance overhead at that 300 to 315 level. This is really the zone that we would need to get in and break above to tell me that we are out of this sideways consolidation range, but things are looking positive for that to happen next week. We also have the 200 moving average just overhead at $290, so that's another resistance to watch out for. However, this base now at 220 has proven to be such strong support on all these retests that I think we really need to pay attention to this $215 to $220 price range in the future should we come back down. Moving over to Hood, this is one of the strongest looking charts in my mind. It's outpacing the NASDAQ and the S&P 500. You can see we have this inverse head and shoulders that we've been talking about. We broke above the neckline, we had a little retest, and now we're breaking away, and our technical price target is at 62.25 roughly, which is about a 35% to the upside from that breakout. No, 38%. I'm still really hoping for a retest to stack a few more shares. If we come back to this mid $40 range, I would be a buyer on Hood. Otherwise, I'm happy just holding my current position to see if we do make it to this eventual price target. Then I imagine a pullback and hopefully we break into new all-time highs, as I think their earnings will continue to increase with all the new product launches they have rolling out this year. Okay, last one for today as we're keeping it short, but the relative strength in Palantir cannot be denied. We were talking on Monday about this 50% resistance and how we need to get above that and hold it for support. And we just rocketed away from that. It looks like we'll be testing all-time highs before not too long. I imagine around the $118 to $120 range, we'll find a bit of resistance there. But this is just catching a bid on those bullish news of the partnership with Anduril and SpaceX on developing the Golden Dome for America. So a lot of positive tailwinds for Palantir. But as I've said before, don't chase moves like this. You want to see a retrace and maybe you can get a lower entry down here. The last thing you want to do is maybe you buy up here next week, seeing where it opens on Monday, and it has a bit more of a pump and you see gains for a minute before it corrects down and you have to live through all that pain. And then who knows if it consolidates and maybe eventually breaks to the upside. But you give yourself much more upside and an easier road ahead if you wait for these pullbacks. So same thing we've been saying on Bitcoin and a lot of these names, wait for the pullback, buy the lower high, and that's a much more confident place to enter as well, because you know lower highs generally lead to continued uptrends. Okay, so that's it for the chart. We're going to move on to the TA portion of the program. And there are many different types of technical analysis. The one I like to follow is Gann swing analysis, which is basically, you've heard of higher lows, lower highs. Gann developed swing analysis, and that all comes from Gann. He also relied on cycles and numbers. There's a lot of nuance and detail to his analysis. So we're just going to get into a cursory overview looking at some key reversal signals that I like to use. There are other things you can use like Elliott wave analysis and things of that sort. I know a little bit of Elliott wave, just enough to be dangerous, but I don't like it as much because the rules are a bit complex, and unless you follow them to a T, Elliott wave can be a bit subjective. But the overarching goal with TA and getting you familiar with some of this is that you use it in concert with, say, your IA indicator suite, if you're subscribed to that, to give you extra confluence and confidence in the trend. You don't want to just rely on indicators for buy and sell signals. You want to use your mind and TA and what you're seeing in the chart to say, okay, there's a buy signal, a sell signal. Is that lining up with other things I'm seeing to give me confidence in making this trade? So let's get back into TradingView, and we're here on the Bitcoin chart. And remember that this is just a cursory overview, but there's much more detail and nuance to them. Actually, hold on one second. Okay. That was something different, right? So here are two Gann books I like. The Truth of the Stock Tape, which is all about chart analysis. They're small books, so you can get through them rather quickly. And there's also Learn Before You Lose and Forecasting by Time Cycles. So this one is more about time and cycle analysis, which is a bit more complex. But anyway, these are good books to check out if you have the time. Okay, so if we're in TradingView, we're starting on the Bitcoin chart. The first thing I want to go over is that nothing can go up in a straight line. The market spends 80% of its time deciding what it wants to do, which would be more of this consolidation and sideways chop. And then it spends 20% of its time getting there, which are these big moves. And these are not sustainable. So that's why we talk about not wanting to buy into these big pumps. As a very simple concept, when you see these big moves, expect consolidation. Here, where we saw consolidation that's moving upward, that is a good indicator of positive momentum coming in. Basically, people are starting to take profits and they're selling out, which is causing sell pressure, but it's still being overcome by the buy pressure. And then when that flips, you know the tables have turned and the sell pressure is starting to overpower the buy pressure. We saw another big pump here on Inauguration Day. This was just a news-driven thing, but this wasn't enough to really set a meaningful higher high. It was more of a double top, and then you could really start seeing that sell pressure take over here. So now we've had another period of consolidation, and we're starting to break away. And this is starting to look like one of those vertical moves. To make this more sustainable and longer lasting, I would love to see some consolidation and a bit more sideways movement, but sometimes Bitcoin is just explosive. Okay, let me just remove some of those squiggles. And we're going to zoom in. I'll go into the 4-hour chart here, and we're just going to zoom into our double bottom. And what are your first signs that this could be a potential bottom? First, you'll notice a change in trend. We're setting lower lows on the way down, and then we have our final low here. And here we have our first higher low. So this is indicating that buying pressure is coming in at a higher price point than it was previously. Also, we have this pretty clean double bottom, which tends to be a bottoming, or on the top end, a double top pattern. Then we set a higher high. So we were higher than this previous high right here on this bounce. And the key one is setting our first higher low. So this is telling us that more buying demand is coming in. And then we break to another higher high. This is your first great sign. And then we don't set a higher low during this entire period. We're consolidating, but we have some equal lows, but we're starting to drift upward. And now we've had this explosive breakaway. So you can see just from a rudimentary structural look at the charts, this is very strong. Also here, we had our top and then a higher low, obviously, because the last swing low was down here. And now we are potentially setting a higher high depending on where this goes. And we want to see where this corrects to. And I would love if we found support at this trend line at 91.8-ish right here, because that was also our previous first line of resistance that we broke through. So ideal mind, perfect structure. We go down here and then we break away and we continue in another explosive move upwards. Okay, let's delete all that again. The other thing I want to talk about is Blowoff Tops really quickly, which isn't necessarily a GAN thing, but it's just something that you should start to identify on charts. So you get out on those moments where things are most frothy and greedy. And I'm just going to look at MicroStrategy, because MicroStrategy actually shows us gaps in the chart. The Bitcoin chart, it's trading 24/7, 365. So we don't get gaps in the chart. But in traditional markets, let me just turn off the GAN swing indicator here. We get gaps in the chart between the previous daily close and the open the next day. So a clear sign of the top is when a stock is moving in a clear stair-step uptrend. This is a healthy pattern. It's building structure. You can see stair-step, 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 stair-step. And as we're going up, notice how volatility in the price movement is starting to increase. So that's your earliest indicator, these bigger swings, that things are starting to heat up and there might be an explosive move coming. And wouldn't you know it, right after that, we get our first gap up. But this first gap up right here, even though gaps normally fill, I wouldn't consider this a blow off top, because we still continue to build structure and it was the first one. But then we have these 3 big candles. And when you have consecutive abnormal days like this, and then at the very end, you see a bigger gap up, that lets you know that, hey, this isn't sustainable and it's time to get out. And the confirmation of that was that huge red day we had just after. And if we're looking for other confirmation on the charts from our indicators, I'll just bring up what was hidden here. You can see on mean reversion, we are just spiked off the chart at 2.64. Again, anything over 2 standard deviations on the daily is a sell signal. And also RSI peaked up here. And if we go back to the recent history of MicroStrategy, you did not see any spikes in mean reversion since that huge run up at the beginning of 2024 that then led into this big period of consolidation. And again, I'm just going to repeat this from previous videos, but the most probable outcome after big moves up is for the market to find equilibrium in a sideways chopping and tightening range before it really tightens up and then decides where it wants to go. So if you were to take this chart and flip it on its head, these extreme moves down and these gaps in stocks can also be used on the flip side for identifying a bottom. Because just like an uptrend like this isn't sustainable, a downtrend like that also is not sustainable. And a V-shaped recovery on a downtrend is a great indicator that you may be bouncing away and have found that low. Okay, moving back to the Bitcoin chart, and I just pulled up the Coinbase version of the chart here, so it's a bit cleaner and you don't have all my other junk on the chart. Right here, we have the bottom of the 22 bear market low. In 2023, the market was just starting to pick up. What I really want to analyze are these bigger moves as we're picking up into the latter part of the market. And so what I want to do here from this first run up, I just want to draw a line from the bottom of the move to the top of the move. And this is giving us an indicator of the time of the move and also the angle or intensity of the move. And we can take that and we can map it over after this big period of consolidation. We'll call this our low here. And we can see how that compares to the next move up. And it gets us right to the middle between these tops. So you can see that this move was a bit shorter in time and it was a bit higher in terms of its intensity, which is a good sign for continuation in the market because this move had more behind it than this initial move right here. So if we take that and we track this over to our bottom right here, what we're using this line for is maybe rough price targets of that mid 130 to say 140 range if it's also going to go higher. But really we're looking at it for our angle and intensity. So if this move consolidates and kind of peters out like this and doesn't move up with a higher intensity than this move prior, that's a sign to you that things aren't going to last and sustain. Ideally, if the market is continuing to heat up and we have all these tailwinds we're talking about institutions buying, about nation states adopting Bitcoin, all of that stuff, if that's really showing through in the charts, this move should be more explosive and should move up faster and more aggressively than any of the moves prior, which also means we're most likely going to have an explosive blow off top at some point. But right now, for the short term, we want to see this. On the bottom side of the chart, what we want to verify that is volume. So you can see right here on this up move, we had an explosive burst in the volume at the bottom of the chart. And volume analysis is important. You can see that generally this volume was decreasing as we were making higher highs and topping out. And that's just telling you that energy is moving out of the space. Right now on this move, we haven't seen that burst in volume. Again, we had a burst in volume right here for this explosive move out. This is bigger than anything you've seen back here on the chart for quite some time. And you can see how that volume orients to all these, sharper moves up. You have a spike in volume. But we haven't seen that yet. So what we want to see ideally next week, maybe we have a little correction before we move up. We need to see that spike in volume come up right here. And then we want to see that volume sustain for as long as possible. If you start seeing volume drop off aggressively and price is still moving up, particularly if price is still moving up, that's a sign for you to watch out and potentially scale out of your position. Okay, let me clean up that chart. And I want to zoom in a bit to particular tops to show you another way that I identify tops or areas where we may be going into consolidation. And this is looking at our daily candles and noticing a change in trend. So one thing to look for is 3 red days. And these need to be red days or green days on the bottom that come at the top of a move. So here we have our move going up. My first warning right here was that we had 3 little red days here, but it just led to a small correction and we continued moving. So if we continue to break past that high price, that's an invalidation of the signal right there. But here we had 3 red days and then the market couldn't rebound and couldn't set a higher high. So this is an indication to you, and these were aggressive down days on big volume, that a consolidation was incoming. Now, did I think it was going to be 8 months of consolidation? No, I did not anticipate that. But longer consolidation periods are a sign to you that the breakout of this consolidation is going to be all the more explosive when it eventually does come. So what did we see on the flip side? Well, if we zoom in here on this first higher low, we saw 3 green days and then an inside bar. So this is your indicator that the trend is starting to turn. And wouldn't you know it, exactly on the top of the move, we also had 3, I'm calling them red days, but technically they are 3 down days. So we had 3 red days. Now, technically this was a green candle because it closed slightly higher, but it was still a down day in terms of price movement overall. So really the signal is about down days, and this is where some of the nuance comes in and you just need to spend time with the charts. But again, this was a sign that we were going to correct for some time. And even though we set that slightly higher high, we just couldn't do it and we came down here. Now, off of our bottom, we had 3 up days, and there's a bit of nuance with this one here too. We had a green day, inside bars don't count, and then 2 more green days. So we had 3 green days here, which is an awesome sign for a reversal. If we flip to the weekly chart, an even stronger sign for the trend changing is 3 green weeks, which hopefully as of the close on Sunday night this weekend, we will see. And the last time you saw 3 green weeks was right here at the end of this correction and consolidation. Okay, so last thing I want to talk about is overbalance and time and price. And if you look at this correction, we had 4 major down moves. Correction, 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 correction. And these 2 right here in the middle were our most severe. So if we measure those, this one here, top to bottom, $17,500 and 8 bars. And then this one here, if we measure it, top to bottom, 7 bars and 21,200. So right now on this move up from the bottom, we have gone a total of 16 bars and $21,300. So more in time and a greater move in price up than any of the moves down in the correction, which is a very positive sign for momentum shifting strongly in the favor of the bulls. So those are some of the basic things I'm looking at in charts to indicate that momentum is shifting from a low into the positive direction. Again, the first would be those higher lows and higher highs. That's your first indicator. This overbalance in time and price, that you have to wait some time for confirmation. But those 3 up days off the bottom, as soon as you see those and learn to identify those, that's one of your first signals to pay attention that things might be moving in another direction. Just on one last positive note on the Bitcoin chart here, if we look at the monthly candles, we almost had 3 red months, which would not be a great sign for things to come ahead. But we had this big candle this month, thanks to this week, that got us above that previous month, which now invalidates this potentially very bearish signal. Okay, I really hope that was a helpful cursory overview of some of the things I'm looking at in the charts to tell me that things may be turning around from an uptrend to a downtrend, or uptrend into consolidation, or downtrend into an uptrend. I just want to give you an idea of how I'm beginning to think about these things and build a thesis that works in concert with, say, the Invest Answers indicators that I'm using. And if I see that buy signal or sell signal, I'm looking at the chart and saying, are the trends and the things I'm seeing in the patterns confirming what the indicator is telling me? I don't just want to blindly follow it every time, even though they do have a high hit rate. I want to get as much confluence as possible across a multitude of signals. So I really do want to hear from you. What kind of trading education or other charting content would be helpful? So please leave those down in the comments below. And also, I am going to do more detailed and nuanced educational content, but I just wanted to get a few basics at the end of this weekly wrap up for you. So have a wonderful weekend, and I'll see you on Monday. Bye for now.